Hey everyone, welcome back. I'm Jeremy Szafron. Okay, Bitcoin just pulled back after testing new all-time highs, and gold is slipping a little bit here as the dollar catches a bid. Wall Street drifts near record levels, and traders are now asking the question, are these breakout moves or are these topping signals? All this as President Trump toured the Federal Reserve's multi-billion-dollar renovation, pressing Jerome Powell to cut interest rates. That moment alone moved the dollar higher and gold lower. And with the Fed's decision coming next week, the stakes, they're only growing. So is this a time to go long, short, or maybe even step aside? Joining me right now is Clem Chambers, market veteran, founder of ADVFN and columnist for Globe and the Forbes. In his latest piece, Clem said that Bitcoin is coiled for a major move one way or the other. And his price calls have had stir up some debate here. Clem, good to see you, my friend. Welcome back to Kitco.
Great to be back, Jeremy.
Hey, I was just reviewing the tape, and last time we had you here on our show, you warned 120,000 could mark a top for Bitcoin. The market slammed right into that level. You basically nailed it. Are you still bearish now, or has something changed?
Well, I mean, I was bearish because if you're getting in the mid 20,000s and it goes to 100 and it pauses and your target is 120,000, I mean, you can't go around thinking you're Nostradamus. You have to think that, well, maybe that's near enough to the top and goodbye. And, the upside is 20,000. The downside is 50,000. So that was my take at that point. But 120,000 it's actually really a novice call because it's twice the previous high. And the halvening meant the supply is half. So last time it did it, it doubled. And the time before that, there was a halvening, it doubled. So it's kind of like an intuitive to say, well, it's halved again, it'll do it again. And it always seems to turn out that way. So that was the call when it was down in the 20,000s, that when it halvened, when the output of new Bitcoin halved, as it did a few months ago, it would then double. And that's what we've seen so far. But underpinning all this is the geopolitical issues and all these little wars that are breaking out. And there's one breaking out at the moment between Thailand and Cambodia. I mean, and when various rich people think they need to get out of town fast, they buy Bitcoin. So bad news like that supports Bitcoin. And you can't really predict, well, you can predict there'll be more of that, but you can't predict how bad it's going to be. So there's this kind of a little bit of a copper bottom under Bitcoin. Mm-hmm. But I do think that, again, this is a natural break for this particular cycle for Bitcoin. But if something awful happened, and there's enough awful things that have happened even in the last few weeks, then it could easily go a lot higher, because ultimately, on top of the cycles, there are things that you didn't know were going to happen that can happen. So, I mean, the classic one for that was when Iran got bombed, 25% of the hash rate of the Bitcoin network just dropped out, because Iran is 25% of the Bitcoin mining. And, what's the implication of something like that? So there's a lot of unknowns out there, but I would say I would be way more bearish than bullish. Okay. But it might stick around this level for quite some time. But when it breaks out, it will move quite a long way, and the breakout will define which direction.
Yeah, that's what I was going to ask you. I mean, how much, right? Because in that Forbes article you wrote, whichever way Bitcoin goes, it's not going to be a small move. So what are you watching now? I mean, other than that geopolitical risk, what signals would tell you if it's a real breakout or maybe a fake out here?
Well, generally, and actually you can see this going on with gold right now. A price of something that has repriced will get a stability level, and it will have an equilibrium, and it will go sideways from that. And really, it's everybody waiting for the next signal, whether it's going to go repricing up or repricing down. And with something like Bitcoin or gold or those kind of assets, you get those sort of movements, particularly if they're volatile. So everybody will be watching for a big breakdown or a big break up. And, I think I still don't want to hold Bitcoin. Yeah, so, I would say that you might see a move back down under 110, and then you start sweating about a move under 100, and then you start really sweating about a move down to 60. So that will be the sort of model that I would have on the bear side. On the bull side, it will simply be, whoa, why is it going up? Why is it going? Whoa, look at that go. And then a week later, somebody blows somebody else up. Yeah. And it will be some war that will occur. So that's really the setups either way. And so that's what I'm watching for on both sides of that.
I know last time we had you on, Clem, I mean, you always say that Bitcoin's kind of for war. And I mean, let's be blunt. Our Kitco viewers trust gold. They see Bitcoin as a kind of speculative tech, not sound money. You've argued that Bitcoin is a hedge against the fiat debasement, but so is gold. And you know, it's done the job for 5,000 years. Which one are you betting on if things crack?
Okay, I have a slightly different model. Gold is for war. Bitcoin is for flight. If you're going to run to the airport with 100 million, you're not going to do it with gold. You can't get it on the plane. It's too heavy. It's a ton, isn't it? Whereas Bitcoin is a smart stick. And in fact, you don't even have to do that. It can already be gone on some exchange somewhere. So if you're going to if you are the minister of plunder at some country and you think that things are getting a bit spicy for you, you put all your liquid into Bitcoin and you get on the private jet. And Bitcoin is for flight. Gold is for war. Gold is for war because central banks buy it as the currency of war, because in a big war, or even one that affects you, when you start to want to buy stuff, minerals, weapons, etc., all of a sudden the other people that will sell it to you for your paper start to say, oh no, I think I need gold, because gold is the currency of war. So, you know, if you are going into this never decreasing cycle of stress that we're seeing, all the countries are laying in gold. I mean, you can even see them emitting it. Poland is buying gold. Oh, why would Poland buy gold? I wonder. Yeah, because gold is for war. And you can't buy it the day before you have a war. You've got to say, likelihood of war has gone up a little bit. Need more gold. Oh, it's gone up again. Oh, need more gold. You can be a long way away from that war, but as you step towards that situation, as you go down that path, you've got to load up on gold. And that's what you're seeing. Various countries loading up on gold, and that's what's driving the price. Yeah. But if you are in, you know, the minister of monkey business in some country, and all of a sudden, you know, someone might be dropping bombs on your head, it's the Bitcoin that you go for. And then you will see the price move. So you will see the price of Bitcoin ramp up, and then literally days later, you'll see some sort of conflict or some sort of, you know, outrage or some sort of emergency occur.
Yeah, I got to ask you, I mean, before we get into this Trump and Powell conversation, I mean, we saw gold dip a little bit this week, but it's still up year to date in most terms, you know, fiat terms at least. If Powell goes ahead and cuts rates after all, does gold reclaim the lead, or is this Bitcoin cycle to lose?
Well, I mean, I think that obviously Powell is a brake on the inflation, although everyone claims that he caused it in the first place. But he doesn't cause inflation. The government that runs deficits cause inflation, and it's his job to keep the train on the tracks. It's his job to stop the wheels coming off. And, you know, he has been fighting the inflation that was created because of the way COVID was handled. And he's got the money supply down, and he's got the balance sheet of the Fed down in such a way. If you go look at the Fed balance sheet, you can see they've really ground out the balance sheet of the Fed. And they've really, I mean, they did QT. So the first thing he did was stop the QT. So that was his first move towards cutting interest rates, his first move to maybe placate the new administration. Because QT is the thing that makes things difficult, because it's sucking cash out of the system. And obviously, the less cash there is to play with, the harder it is to play the economic game. But interest rates are going to come down, and they are going to come down quite a bit. And, you know, the dollar is going to be weaker because, you know, Trump wants the dollar weaker. The dollar is way too strong. If you look at the way the dollar is priced against other currencies, other fiat, it's way too strong. So you will see the dollar coming down, and that will be, you know, won't help inflation. There's going to be elevated inflation for, you know, until further notice, 4 or 5% of underneath the hood. When you go down and go, hold on a minute, we've only got 3.5% inflation. It feels like 6. You know, that the sort of inflation that we feel but are told isn't there, that's going to be elevated for quite a long time, because you run big deficits. You got to print money. And if you print money, you undermine the value of money. And that's what we're seeing.
Okay, I want to, well, I guess I could ask you too. I mean, if Trump gets his way and rates come down while tariffs go up, wouldn't that be a double whammy for the dollar long term?
Double whammy, yeah. Well, I mean, not necessarily the tariffs, but certainly the dollar coming down.
Yeah.
I mean, tariffs is a tax. So, that could help keep the deficit under control or, not so out of control. So, there's the thing about all these predictions and why so many professionals get it wrong is there's so many moving parts. And sometimes, it's quite easy for something to have the absolute opposite effect of what everyone's expecting. As we saw with QE, everybody said QE was going to be inflationary, and it wasn't. So what we will see, I believe, is a double whammy as far as inflation goes, which is big deficits and the necessity for a falling dollar. So there will be elevated, not runaway, not incredibly terrible inflation, but elevated inflation, 1, 2, 3 points above the 2% target.
Yeah, let's switch over. I mean, I'm sure if you were maybe watching that press conference, that renovation tour, it made for some interesting TV. Hard hats, jab over these cost overruns, and a fresh call to lower rates. Hey, Louis, let's play that clip.
Like it's got a long way to go. Yes, sir. So,
President, are there things the chairman can say to you today that would make you back off some of the earlier criticism?
well, I'd love him to lower interest rates. Other than that, what can I tell you?
All right. Awkward silence, a little bit of a giggle. But here's a serious question. If Powell folds and cuts rates, I mean, what reacts first? Is it Bitcoin, gold, or is it the stock market?
Well, rates are going to come down and he will lower them.
Yeah.
But it's his duty to the American people to do what his mandate says, which is to manage inflation as much as possible and manage employment. So there's a balancing act there. And, you know, when really bad things happen, he's quite capable of dropping interest rates a lot and printing money like crazy, like they did during COVID. But, he's got his PhDs, as they were called, and he's got his models, and, they know what they're doing. And it's his duty, it's his mandate to do the very best for employment and inflation. And, he's not buckling to political pressure, which is actually his job. The way it's set up is so that the governor of the Fed does not buckle to political pressure, because we all know politicians want a short-term win and don't care about the long-term outcome, because all they care about is getting elected. So it's literally, it's probably 0.3 on his employment contract. Do not buckle to political pressure. And he's doing it. And I have total respect for him.
Hey, speaking of political pressure, while he was at the Fed doing that tour, he also dropped another bomb. He said that there was a 50-50 shot at a U.S.-EU trade deal. If there's no deal by August 1st, tariffs hit 30% on general goods, 25% on autos, double rates on steel and aluminum, and maybe even some semiconductors and pharma. I mean, you're in Europe. Are you hearing anything about this, or just more smoke than fire? What are your thoughts?
Well, I mean, I think Europe's position is, don't rise to the bait. Yeah. Don't be trolled. If it happens, it happens. And, they're not going to buckle. They're not going to bend. And in fact, they've been told to get on with dealing with Russia, and that America's not going to, help them there. So as there's this detachment from the old style of America really almost leading, in fact, actually leading Europe, and that Europe's now meant to be big enough to look after itself, et cetera, well, they're going to do that. And I think that's really, really good for Europe, because ultimately Europe has got a bigger population than America and roughly the sort of same GDP in terms of per head and purchasing power. Now, GDP in dollar terms is out of whack, and GDP of Japan in dollar terms is out of whack. And that's because the dollar's too strong. But obviously, when the dollar starts to come down, you'll notice that in economic power, Europe is pretty much similar to America, and Europe should be getting on with it and should be doing lots of systemic changes, which they'll have to do now, which actually America is doing. So, this is all just a change. It's a new era. Europe is going to be standing much more on its own 2 feet, and it's not going to allow itself to be trolled by America. And, if Trump wants to put X% on, well, it's probably his loss in their mind. But we will see. But if you look at the last few months, what Trump says he's going to do, it doesn't happen. what he says, way it's going to go, it doesn't go. And he's basically negotiating in public through Twitter and Truth Social, which is utterly new way of doing business. And, it's quite effective. It's certainly incredibly entertaining. Best of luck to all parties, because frankly, we want the best outcome for everybody. And, who would be unhappy with Trump actually pulling off what he's trying to pull off? Well, nobody should be unhappy if he pulls it off. Now, if he makes a complete pig's ear of it and an economic and geopolitical disaster out of it, obviously that'll be terrible. But, we still don't know, do we? And if anybody tells me they know the outcome of this administration, then I would like to, have a look at their crystal balls.
I mean, I wonder if it's almost underpriced in the market, too. I mean, meanwhile, the markets keep rolling. I mean, last time we had you on, we talked about that bubble trouble, if we're already in one. I mean, you've heard about these meme stocks. They're back. NVIDIA is bigger than Germany's GDP, and most of the S&P looks priced for perfection. Clem, is this just a, melt-up mania, or is there still time to maybe ride it out before a crash? What are your thoughts?
It's very, very interesting. And I'm sorry, I better put my tin hat on here, because this is market manipulation by the government. Now, if you look at the market after the tariff crash, it's very, very, very low on volatility. And, if you look at the right charts, before that, you see a lot more week to week volatility than you're seeing now. It just goes straight up, smooth as a snooker ball. And, that's the sort of lack of volatility that tends to come from manipulation, price support. Because when you have price support, whoever's supporting the price basically absorbs any selling. And it's just, moving the price. Anything that would push the price down, it is absorbed. And, that's coming from somewhere. Because you can't tell me there's good reason why there should be less volatility in the American stock markets right now than there was, say, 18 months ago. I mean,
who's it coming from? Where's it coming from? Who's doing it?
Well, I don't think it's Powell this time. Obviously, the Fed has been very much the guardian of the stock markets. I think it's coming from the American Treasury. That all the signs seem to suggest that it's the American Treasury using its levers to pump liquidity in to the market to keep it on track, or in fact repair it. But now it's repaired. Now the prices are kind of back to where they were before the tariff crash. It's interesting to see what will happen, because if the prices are just being supported to get you back there, well, that support's going to go away, because support is expensive. I mean, generally it's very expensive, unless of course the support is right about where the price should be, as you see happen after big crashes. But you can't go on supporting it from day to day. So it will be interesting to see whether the day-to-day, week-to-week volatility returns or not, now that we're back to those levels. And I wouldn't be surprised if we don't start to see more lumps and bumps in the market. But I have said for a long time that there's a NASDAQ bubble coming, and we've been in a pre-bubble end of boom phase. And I would not be surprised if the NASDAQ doesn't go into some sort of insane bubble phase. And, if it starts to go that way, people can say, oh, somebody said it's going to go into a bubble. Oh, great. Let's do the bubble trading. But remember, if you go into a bubble, it ends and then you get the crash. So if we do go into a bubble, bear in mind while you're having a good time that music will stop, and it will be a really, really, gritty time when it does.
Yeah, Clem, so, I mean, we got to ask you about the Treasury. I mean, if the Treasury is the new market maker, how does that distort true price discovery and, gold, bonds, equities?
Well, everything. It distorts everything. Yeah, sure. I mean, that's what makes the market so difficult now.
Yeah.
Is that the good old, kind of went away 2010, 9-10. Because, when we had the financial crisis, the governments of the world came in and they bailed everything out and they propped everything up and they kept it there and let it repair itself, let the injured patient, recuperate. And you saw that again in COVID. I mean, without massive government intervention, the world would have been a smoking economic crater, for sure, absolutely for sure. But they stepped in and did massive interventions. And, that is, they haven't really got out of the habit of that. And maybe nothing will ever get them out of the habit of that. And that is actually makes it very difficult for price disclosure. And it means you have to have a very, very clear view of what you think's going on.
Let's talk about where you're at. I mean, in the Forbes article, you said I'm bearish, but I'd never short Bitcoin. So where are you actually positioned right now? Cash, commodities, any contrarian trades? Where are you at?
I've got quite a lot of contrarian, really. Before the crash happened earlier this year, I saw it come in and got completely out. And I did not, and still can't really say that I have any idea why the markets have, in detail, why the markets have bounced back like they have. It is a bounce like which there's never been in the market, as far as I'm aware. It was a fabulous recovery. And as it started to recover, I kept some of my really deeply contrarian positions. I loaded up on precious metals. So the precious metals have been good to me. The contrarian positions have been very good to me. And now here I sit in lots of, I'm in value interest paying shares because the rotation out of the dollar means that a lot of dollar money is going into similar equities that mirror the American equities in a way of escaping a potential fall in dollar. So that is going on in the market, and I'm positioned for that. And therefore I'm positioned into things that will go up when people who have got carry trades or positions in America go, I don't want to lose 10% in dollar value in these stocks. I don't mind if they stay still, but if they're going to drop 10% in actual global money value, I don't like that. So I'm going to buy very similar stocks in Europe and in the UK that have good value in comparison with America. So when the dollar comes down, I'll still have those equity positions, but I'll make on the Forex, and then I'll be able to flip it back into America when it all settles down. So that's where I am, and lots of precious metals.
Yeah, that foreign exchange. I mean, sometimes it's crazy. You can get a good 4 or 5% on it. If I was to make it even more simple, if you get to buy one today, you've got to borrow gold, a Bitcoin cold wallet, or maybe a high dividend stock like you're talking on that interest rate. What are you picking first?
I wouldn't be in Bitcoin. Where I would be, that was equally as spicy and equally as fun potentially. Because, Bitcoin is a high speculative asset. I would be in palladium. And palladium is something I've been talking a lot about that. Platinum, palladium, they make 200 tons of that a year. It's the demise of platinum and palladium because of internal combustion engine going away. That's a dead duck now. And they only make 200 tons of it. They make 3,200 tons of gold. They make 25,000 tons of silver. 200 tons. So any turnaround there is going to be, absolutely ballistic. Now, back in the day, not that far back, gold and platinum were 1-to-1. Platinum's $1,200 or whatever it is. It was like $900 when I started talking about this. $1,300 an ounce. It should be 1-to-1, 3,400, right? And in fact, if you go back another 5 or 10 years, it was 2-to-1 to gold. Because they only make 200 ounces of it, 200 tons of it. And the same with palladium. So they really don't make any of this stuff. And it's coming back into fashion. And it's a precious metal. So it's logical that it will have a renaissance. And it will, do very, very well. It will start to catch back up with where gold is, which is likely to also to be going up as well. So you've got a double, almost a triple whammy. And they don't make any of it. 200 tons, I think the average American family uses 50 tons of stuff every year. So that's how small 200 tons is. An American family will chew through 50 tons of, Amazon boxes or whatever. And so 200 tons is basically nothing.
Yeah. We keep hearing about the supply disruptions in South Africa. They've been persistent. And then with that constrained mine output, prices, they still haven't really recovered. Is it the demand collapse story, or are we missing a deeper inventory unwind?
Well, it was a demand collapse story,
right?
Because internal combustion engines were going to go away, and all those cat converters were going to get crushed up and shipped to China to be reprocessed into platinum metal. And then who's going to use that apart from, the chemistry industries? Well, the internal combustion engine is not going to go away. And the main reason for that is AI is going to eat all the energy on the planet. Yeah, because there's no limit to the demand of AI, and AI may as well be pure energy usage. So there's going to be an infinite demand for it. So no energy is going to be left unburnt, right? So the internal combustion engine is not going to go away now. And to ameliorate that pollution, platinum and palladium, they're the elements for that. They are environmental elements, they're catalysts. So all of a sudden, not only the reason why the price is so low is going away, has gone away, and the reason why it will be, in demand, further demand, is arriving right now. And, the hydrogen economy uses platinum and palladium for the fuel cells. So there's themes like that. So bottom line is the death of platinum, that meme's gone, and it's going to be the opposite now. And they only make 200 tons of it every year. And, I haven't been following what's going on in South Africa. There's another reason why it's going to go up. So, it seems to, and all it has to do is get back to where it was a few years ago, 1-to-1. And if you look at palladium share price, commodity price, or even 3 years ago, I think it was $4,000 an ounce, not 1,000.
Yeah, wow.
So there you go.
Interesting opportunity. I got to ask you about altcoins. I had a couple of viewers write in and say, you got to ask Clem. I mean, Bitcoin's obviously in the spotlight, but we've seen a bounce in Ethereum, Solana, even some of these meme coins. Is this a rotation into alts for real, or is it just kind of end of cycle noise?
It's read through. I mean, if you were like me, let's say I was a completely all in crypto person, I'd be looking at Bitcoin going and say, well, I've done really, really well. Now, what's cheap? Well, look at Ethereum. Wow, that's kind of half of what it was at the previous peak. I'll have some of that. I'll rotate out of some of my Bitcoin into Ethereum. It is the second biggest brand in crypto. Ethereum is the other brand. And, it's only natural that it would do that. And yes, it is kind of a sign of the end of the cycle. It doesn't have to be, but it is one of those flags. But, when I think altcoins, I think coins that are new. Crypto that's come out of nowhere, backed by some VCs or something, A12Z or whatever, have come up with a noodle chain, and it's really, really great and spicy, and it's going to change the world, and et cetera, et cetera, et cetera. And, oh, look, there's another one this week. Oh, look, there's another one this week. Oh, look, there's another one. That's what I think of as altcoins. And there hasn't really been much this time round. And that explosive move that you saw in the previous cycle came from novelty. And the only novelty we've had this time around is the AI agentic coins that were on Solana back in December. And they did what everybody wants altcoins to do, which is, be 2 cents one day and then be $3 the next. And that actually happened when Bitcoin did its first run. So, this secondary bounce, it's rather like the original second bounce from the previous cycle, is really getting close to the end. But if something bad happens out there, if Thailand does go to war with Cambodia and lots of countries jump on and start blowing stuff up, then, Bitcoin's not going down. But if peace breaks out, if sanity breaks out, okay, not much chance of that. But if it were to do that, then Bitcoin's coming down a long way.
Yeah, interesting. Okay, well, you heard it here first. Clem Chambers, of course, joining us from Europe. Appreciate it. It's always a pleasure. Nice to see you. Wishing you the best of summer.
Thank you very much, Jeremy. Thanks for having me on.
Of course, Mike. Appreciate your time. All right, whether you're in gold, Bitcoin, or just sitting in cash, this is not a market for autopilot investing. And with Trump pressing the Fed, Europe bracing for tariffs, and the rate cut still on the table next week, things could flip fast. Now, we'll be watching it all right here at Kitco News with a full week of coverage and high-impact guests coming up. Subscribe right here on YouTube. Follow us for daily interviews. Stay sharp. I'm Jeremy Szafron.